Samir Arora, Fund Manager with Helios Capital. Samir, good morning. Great to have you with us here. Thanks very much for your time. What is your sense about the exit polls? I mean, what they're throwing up in terms of results?
I think from a stock market point of view, they are irrelevant this time because there were not much expectations of what can change. In Tamil Nadu, whether it's one party or the other, all we know is that they don't want to seek more alternatives, and maybe similarly in West Bengal. So we can wish all the citizens of those two states best of luck.
And there is no real impact for the Rajya Sabha equation as well, right? No real changes. Maybe a couple of seats for the BJP in over time from Assam, but otherwise nothing.
That they will still need support of others. But if the biggest party, that is Congress's share goes down, that makes it a little easier perhaps for BJP to get support from others.
Yeah. Although the point is on the other side, the Congress has DMK as a partner, right? In Tamil Nadu. So it kind of sort of balances that out in a way.
But right now I was thinking that other than GST, there is no one big picture sort of reform or whatever where, there'll be every day something new, but in a big picture sense, nothing so serious that we are looking for that suddenly people get nervous about these issues. So right now, I have not even analyzed it because, ultimately we have only 16 hours in a day. Some people make it 17 hours in a day, but I have 16 hours in a day, so I can't analyze everything.
Yeah. Although there are some, once in a while you get some tax-related surprises, right, Samir? Like we got recently.
No, it's not a surprise. The issue is not the tax because, if you look at it, long-term capital gain 0 and future 0. So the only thing is short-term. And short-term, at least I don't have short-term gains. I mostly have short-term losses simply because when I buy a stock, I think I'm going to hold it for a long term. And we blow it out only if it disappoints or basically a mistake has happened. So everybody in this industry is going to have more losses. My thinking is only that it is not required because we don't think that anybody is going to have $1 of short-term income basically to give any taxes. So in the end, it will be the same $500-800 million annual collection, which is like 2,000 crores or something, and nobody will have more. Because if you look at longer term, you can also carry losses for 8 years. So in one particular year, like a 2007, maybe they'll be very high. But then you'll have an 8 kind year, and that will make sure that for the next 4 years there will be no short-term gains. People will also change their behavior. You're allowed to book short-term losses, and generally I think there will be no effect in the end in terms of any tax collections from the government. So that's what I think.
Yeah. Although it's interesting that the tax doesn't apply on derivatives yet, right? I was talking to some people who in turn had talked to government, and they said that there is a separate notification with regards to that which will be out soon. So it's not as if it's exempt, but so far it is not applicable on derivatives.
Don't please keep saying yet and so far. It has been clarified that there will be no tax.
On derivatives. There is no tax on derivatives.
That's what they have said, that this is a treaty thing, that it is decided by the other country and all that. By the way, if there was a tax on derivatives and that tax was, say, 33%, that would be the end of quite a few businesses in India. Forget about Mauritius. Quite a few businesses in India will close. Businesses, I'm talking about the financial guys. But in general, as of now, we understand that there's no tax on derivatives, and it is not a choice of the government of India in that sense, because they themselves say that this is never taxed and it's not part of the treaty, and therefore it is done by the host country or something. I saw an interview by finance secretary or somebody on one of your channels. So I would assume for the moment it's not there.
Yeah. No, okay, fair enough. What's your sense about the market itself, Samir? I mean, I know only half jokingly said you only have short-term losses. We know that is not true.
That if a stock that I own does well, I normally tend to keep it for long. Because generally you come in thinking that this is a great stock you found, and if it sort of reinforces that, I'm saying that normally when you realize a short-term trade, it will be a loss. Otherwise we are our performance is a bit different from our peers. So that is never an issue. But the point is that normally when you're forced to sell in the short term, very rarely is it because you have made enough money and you think it's going to go bad. You feel normally that, okay, now, I did a good trade and I'm going to keep it for a long time. So there will not be much of short-term gain. On the market, I'm quite bullish. In fact, very bullish. Basically because the government has done what it has and this bankruptcy bill is good. And in addition, we still hope that there will be very good monsoons. The base effect is already working. You can see that the earnings growth are already some 9-10% for the first quarter. And if you remove some of the PSU banks, where they had to make a lot of, basically they had to reserve for their NPAs and all that, make provisions, the growth would be even higher. So far so good.
Samir, do you expect the way the market is being, the market has been bullish for a while, it's just that it's not really gone past some levels, right? To go up 10%, it's first fallen 10%. Do you expect that to change? A more secular kind of move higher? Or the nature of the market remains kind of sort of unchanged? That's what we've seen.
Market has not been bullish for a long time if you look at the index. If you look at 2 years index or 1 year index, actually market is down. Year to date also it is down. So, it is easy to say after it is up 10-15% that the market has been bullish for long and everybody knew it and all that. But I read an interview by the big bull who said that in February he thought it was the end of the world. And suddenly he says he's the most bullish that he's ever been in his life. I normally don't change in 2 months for no reason other than the fact that market is down, so I suddenly feel it's the end of the world and now I feel it's top of the world. Bottom line is that the Indian market, on average, excluding the extreme either stocks or stock performances, has been a very, very consistent performer. So if you look at our index for the last 2 years, it's not up, but nearly everybody is up more than 10-15% per annum annualized, maybe even more if you count 14 second half and all that. But in general, this market is been a great performer for a very long time. Then in between you get episodes like 2008, a little bit of 11, and you have to know the big picture, frame the problem right, that short term is very volatile in India, but generally it's a good market. Don't average if you don't have confidence, but believe that in the long run this market has done well and will continue to do well, and that has been our formula. We may change a little bit on the margin on a bad time because we try to defend some stock that we feel suddenly that the last stock is not good or one stock is not good, but in general it's been a great market and will continue to be, and nobody can really stop that. And saying that it's the best market 1 week and saying it's the worst market in Feb also doesn't help. So broadly it's a good market, will always remain a good market because the earnings growth of our corporate sector on average, leave out the extremes, is always 14-15% because of just the nature of our market in terms of development, in terms of competition, in terms of under-penetration, potential, and therefore we always like the market more or less.
Okay. One sector, for years now, right? Which are the sectors you ask any fund manager they're bullish on? They'll say private financials, some consumer stocks, autos maybe. Those are typical names which come up.
They don't. I don't like the starting point. Because you look at the biggest mutual fund in India, all its positions are public sector banks. You see, the beauty of this market is, and of any market is, that any individual who's young and new and coming into the market feels embarrassed to say that he owns private sector banks. So they would say, I like Federal Bank, I like this bank, I like IDBI Bank, because they want to show that they have now not followed what is obvious in our market, but want to discover. There is no value for just saying that I want to discover something. For many years, the same things go on with the same logic and they just go on and on because it depends on execution. But still, in the last 2 years, whether you like it or not, at a net level, foreigners have not been allowed to even buy HDFC Bank. It's not only that they have sold, obviously they're not selling because it is at a limit, But if every year we used to get $15 billion to $20 billion of foreign flows, and of that 7.5% used to go into buying HDFC Bank because that was the weightage in the MSCI index, let's say. And for the last 3 years, you have deprived HDFC Bank of net buying of more than $3 to $4 billion, let's say. And still the stock has outperformed. But there is this compulsion all the time in our market, on our channels, that, oh, this we know, find me something new. There is no reason to.
No, so you agree with me. You interrupted me there, Samir. That's what I'm saying. That you ask, that's what I said, right? That generally
fund managers have it, they don't. Because they keep trying to discover new things. Because their ego doesn't allow them to follow what I've been saying. So they must find a federal bank or some XYZ bank because there's a turnaround, there's low valuation, there is no need. I'm talking from a retail point of view. Don't follow just because you want a new name. But everybody doesn't do it, I think.
No, so I kind of phrased the question in a way that private banks, right? Top of the list, really top of the list. People might say they like a federal bank or the next HDFC bank, but there's only one HDFC bank, at least so far. Something else might make some more money for you in the near term, medium term, but over the years, there's one HDFC bank. My question was different. My question is, just as PSU banks go from showing numbers, distressing numbers, 10% NPL levels for a bank like Bank of Baroda, after what they said, by the way, in the third quarter, or other banks, for example, SBI will report end May. But some 12, 13 PSU banks are showing extreme distress. And then you have private banks, which were great, but are now out of the world. Because, the comparison is always relative. They're all lending into the same economy. Now they're superlative if you compare them to the public bank performance. My question is a shoe going to drop somewhere along the line? Or you think these are great companies and they'll continue this kind of performance? Yeah.
First of all, shoe has already dropped because we started with more than 4 private sector banks, including us in our ownership and our market as a whole. So there were state-owned banks. Then there were state-owned banks which had started, they were not state-owned, but they were sort of 2-3 levels down or 1 level down, effectively state-owned banks. And they had become, in our category, private sector banks. And then we had pure private sector banks. We have old banks which are private sector technically, but they have always acted as if they are either community banks or effectively state-owned banks, or of something of that nature. So that has already shrunk to now maybe 3 or 4 names from maybe 6 names, and you know which 2 names I'm talking about, which I call as ex-PSU type private sector banks. So that has obviously shrunk. But the point is that one day before the last one has to drop, or has to fall, I think the economy has turned. So now somebody can say that next year, the earnings growth of these PSU banks will look the highest. And therefore they are buying it on that basis because they don't look at stocks as businesses, they don't look them as companies, they don't look them as owners. They read Warren Buffett, but they want to buy highest earnings growth because they look at earning as a number. I am not in that camp, so I don't buy businesses which just show a high number because, because last year they wrote off everything, so it looked like 50% growth. Obviously, many people do that and some will have good performance for some period. We don't do it like that. Broadly speaking, just buying numbers of a screen, it cannot work for a long time, but once in a while it may work. So you may have next year a good PSU bank rally on the basis that this year is bad. We don't choose to do those things, so we don't buy. But I don't think this is going to continue forever. This is a cyclical event, because if you look at the PSU banks, we also should not blame them for all the losses as if they didn't know how to lend. They lend to, say, commodity related sectors or to sectors where a road was coming up and things got delayed. That thing is not going to happen again and again. This is a legacy issue, but it's a very big legacy issue. And while dealing with it, for the next 1 or 2 years, numbers will look good. But I don't think that would have also signified that they have suddenly changed and they have become private sector, or not even private sector, that they have become professional in some sense. Because that can only be done by incentives. The only incentive to a bank employee is that if you do things properly, you will not, you will have a peaceful retirement. Otherwise, we'll be going after you. That is not a good incentive. But it doesn't mean that there's an easy solution to how this incentive will change. So we just say move on. There are many other things in life to do. But it's not an easy problem. It's not that I know what the solution is, but I know that the problem is there.
Right. No, but I mean, so your advice is to stay invested in the private bank space, right? Don't try to be, yeah, that's...
There's no need to do this thing because it's a tough thing. It's not that, government is not doing something. The point is what to do. This country, as in India, it is not that we have sold to them reforms in a way where they accept that we can change. For example, we allowed one person to come into Bank of Baroda. I'm not 100% sure, because I don't even analyze this much, but I don't think even a secretary was allowed to change. I have never heard of a change in management where one person comes, not his, trusted team from his previous job, or even his executive assistant, or his secretary, or his, a team does these things. So, therefore, these are very tough things to do. Now, it is true at some point the valuations will become good and people will discount everything. I don't do so much effort in my life, so I don't try and find out what is discount.
Yeah, as they say, there are old traders and bold traders, but there are no old and bold traders, right? So don't try to be too bold. Just try to be, staid and boring, old and rich. But anyway, not calling you old, Samir. Just one thing though, I was talking to the management of Capital First. It's run by a gentleman who used to, be with ICICI Bank many years back. And he was telling me that he sees 4-5 years of absolutely, clean run. Great run in terms of growing their book, being able to gain market share. Is that true for, I'm not talking about asset quality, etc., but I'm just talking about this entire thing about market share gains for private banks and non-banks.
I totally agree, by the way. Totally agree. Actually, we think that all the NBFCs we own, without any effort, they are going to grow their earnings literally every quarter by 20% plus, not over the previous quarter, I'm saying over the previous year. And we don't even have to analyze them much. So we own maybe 6-7 of them. I don't think any of them will have less than 20% per annum growth for next 3, 4, 5 years. Actually, the thing is very simple. They've been growing like that till this quarter, last quarter. So suddenly to imagine that they will change when the underlying things are changing. You see, there was not only agri slowdown or problems. If the rains come, there was mining slowdown, there was government approval slowdown, there was construction slowdown, there was real estate slowdown. Now, not all of them will turn, but we know that they are at least bottoming out in many areas, and in general there's under-penetration. You can grow by going to new states. I'm talking about these SKS types. There are many of them now. And I think all of them are going to grow for a long time, maybe 5-10 years. They're all going to be multi-bankers.
But generally speaking, somebody like a Capital First isn't competing with HDFC Bank or ICICI Bank, right? I'm just using that as an example. They lend to people with, not that much in terms of a credit history. They're able to charge a higher rate, 16-17% rate. That allows them a large margin. Are you comfortable with those kind of that kind of business model?
We don't
sorry.
We own so many of them. But in general, if you talk about people who are giving to the micro, like a subprime kind, or small ticket lending, the loans are of the order of 9,000 rupees per head, or in some case 12,000 rupees per head, which is say $150. Now let's be shameless about it from a pure stock market point of view. Till you continue to put more money, the old guy will never default. It's not going to suddenly stop. So because you know that in the second round, if he gives back these 9,000 rupees, you are allowed to give him, say, under your own systems and rules, 12,000 rupees or 15,000 rupees. This will go on for a long time till the ability of that borrower to handle that debt is gone, or your ability to give money is there. So these things, when they get into a positive spiral or a positive cycle, they will raise money. You will give to the guy who's getting 9,000, he will give it back because you know that you're going to give him 10,000, and this will go for 5 years. We are not talking that in the 6th year because we don't know. But right now they are at the start of things.
Okay. Samir, any specific ideas you might want to share with us? Not to, I mean, any interesting trends or
And without
moves
realizing
you've
only
seen recently?
3 names.
Yeah.
I've only given you 3 names, which is more than what I normally would give.
Let me throw a few names your way. Any thoughts on
the average loan? How much is the average loan? No, this much work your fellows have to do. Which companies are these? Which are these new companies which are growing at 20% for 5 years and will grow for 5 years? I mean, everybody knows these companies. Yeah, please, I'm not going to give name. And maybe we should also take the number of your.
I am throwing some names your way.
Buy it for
I'm
him.
not asking you.
Your buyer.
Just dial, Samir.
Some work.
Yeah. Just Dial has started. You had some thoughts on Just Dial sometime back when we chatted.
This is India is a democracy. You're not supposed to talk so much.
No, we're supposed to argue and talk a lot, Samir, actually. Any thoughts on Kaveri seeds?
That is only in USA.
Kaveri, Samir. Kaveri.
No, I don't have a view, but we don't buy companies where there are no taxes. Because it's not clear to me that whether this fact that agricultural income has no tax, is it to be applicable to corporates, even though they may say, I don't know. It's nothing to do with Kaveri. I won't buy any of these because I don't like one-time events, which I know are a bit pushing the law or whatever you want to call it. I won't buy it.
Okay, all right, fair enough. We'll leave it there. Gentlemen, Samir, thank you very much. Appreciate you joining us and good chat as always. Appreciate it.